MACD is known as the king of indicators. All traders cannot avoid what MACD when observing the market. Remember, it is everything.
Don't forget to like, subscribe, collect.
Hey everyone, welcome back to my Technical Indicator Learning channel. Today we're going to master one of the classic indicator of the market in just 10 minutes, MACD. Whether you trade stocks, crypto, or Forex, MACD is an indicator almost every trader uses. Some even say, if you don't understand MACD, you don't understand trends. But here's the problem. Most people get golden cross and death crosses without really understanding the core logic behind MACD. Let's break down from 3 angles: structure, logic, and real trading usage. By the end, you'll be able to use it right away. So, what is MACD?
First, let's understand what exactly is MACD. MACD stands for Moving Average Convergence Divergence. Sounds complicated, right? But you can simplify it into one sentence. It's a tool used to measure trend strength and trend changes. MACD has 3 main components. First, the diff line, fast line. Second, the DA line, slow line. Third, the histogram. In simple terms, the 2 lines show the trend. The histogram shows momentum.
How is the MACD calculated?
Don't worry, let's keep it simple. At its core, MACD is based on 2 EMAs. A short-term EMA, like 12. A long-term EMA, like 26. DIF equals short-term EMA, long-term EMA. Then we smooth DIF to get DEA. Finally, histogram equals diff, DEA. You don't need to memorize the formula. Just remember this. MACD is essentially comparing short-term trends versus long-term trends.
The 3 core signals of MACD.
There are 3 key MACD signals you must remember. First, golden cross, death cross. When DIF crosses above DEA bullish signal, when diff crosses below DEA bearish signal. Second, zero line. Above zero, bullish market. Below zero, bearish market. Third, histogram. Bars getting longer, momentum increasing. Bars getting shorter, momentum weakening. The first point, practical use of MACD. First, check the zero line, then the direction. Above zero, focus on long trades. Below zero, focus on short trades. Trend comes first, signals come second. The second point, in an uptrend, wait for a golden cross to enter. In a downtrend, wait for a death cross. But remember, always trade with the trend. The third point, this is the most powerful and profitable MACD signal. Price makes a new high. But MACD doesn't bearish divergence. Price makes a new low, but MACD doesn't bullish divergence. This means a reversal may be coming. The fourth point, the histogram is actually a leading signal. Bars getting shorter, momentum is weakening. Bars flipping direction trend may change. Very often, the histogram gives signals earlier than crossovers. Common misconceptions about MACD. MACD is powerful, but many people misuse it. First, using it in sideways markets. In ranging markets, MACD will give lots of false signals. Second, only looking at crossovers. A crossover without trend context is often a trap. Third, no stop loss. Even the best signals can fail. All right, that's MACD in 10 minutes. Let's summarize. MACD equals trend plus momentum. Core usage. Use the zero line to identify trends. Use crossovers for entries and exits. Use divergence to catch reversals. Use the histogram for early signals. If you found this helpful, don't forget to like and subscribe. Next time, we'll cover a more advanced indicator strategy. Tell me in the comments, have you ever made money using MACD, or does it feel like a reverse indicator for you? See you in the next video.